Good evening and welcome to tonight's webinar. It's member-only content where we look at ASX investment opportunities for the 3rd of May. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service. If you'd like to know more about it, please contact me on 1300 614 002. The technology we're using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year. If we have people joining us this evening that are participating in their 30-day trial, if you'd like to know more about navigating the way around the technology, or if you'd like to just simply have a discussion around the opportunities we're focusing on in the market at the moment, again, please give me a call on the office number on screen. The Nasdaq's back up against sort of that prior high, so we've got what may be the early stages of a double top forming. The technology results so far in US earnings, in particular among Amazon, Alphabet, Microsoft, have been extremely strong, as too with the chip companies with AMD and Qualcomm. But as I've discussed previously, there's a lot of good news already in the share prices, and we're not seeing a strong follow through in the share price performance for the most part of that technology sector. We start to see some of the industrial companies report over the next, this week and into next week. So we just keep an eye on the US equity market. I think there's still a reason to stay long equities, but remain just a little bit cautious if we see momentum pick up in the Nasdaq. And as a reference point, just simply if you start to see we had a close below the average on Friday night, and if we continue to see close below that in tonight's session in the US, and that fits into really the theme at the moment that I'll be talking about this evening, which is starting to have a think about reducing the number of holdings in the portfolio, and that's really just a cautionary positioning over the next week or two, and still until we start to see what that average earnings growth picture looks like at the completion of the March quarter results. So with that, let's move into the ASX Top 100. I'll move through these, and then at the end I'll focus in on the handful of opportunities that I think sort of rank higher than most others. So right at the moment, TPG, we're seeing a little bit of buying interest come into this after the selling that took place with the resignation of the chairman. At $5.50, we've had a strong bounce off support there today. I still think that the pitch is reasonably solid there for TPG following the merger with Vodafone. So there'll be a point where that stock rallies back to sort of that, at least that $7.50 level. Whether it has the earnings growth to drive it too much beyond that, we'll just have to wait and see. But we'll continue to watch future earnings updates with TPG and comment on that on the blog and the recordings. Charter Hall, now the positioning with real estate investment trust mostly hasn't changed, and that is that thinking about the ETF, SLF, or I think MBA is the other alternative, but SLF, and I'll just maybe bring that up and then we'll jump back to the top 100, because I've commented on this SLF a number of times. So that it's moved up roughly about 15% from the lows, so it switched to algorithm buy signals there back in February at around $11, just above, now trading $12.50. I don't expect this to really break out materially, but it should slowly grind higher in line with just it's an oversold sector, and gradually reopening in the economy should see some level of normalisation, but not an expectation for it to return back to the prior peaks at $15. So it's a slow grind higher from where it is there at the moment. So rather than holding too many of the REITs, albeit that they are under algorithm buy signals, the SLF just provides an alternative to that. But in the case of Charter Hall, it switched to algorithm buy conditions, now trading up towards $14.20. Star Entertainment switched to algorithm buy signals there at around $3.50, now pushing up to $4. Goodman Group, high quality business, above average growth, is getting expensive. In prior recordings, I've highlighted to you that the company's growing earnings at about 10 to 13% per annum, which is well above most REITs, but the dividend yields roughly half of that of the rest of the REIT sector. So Goodman Group's on less than 2% dividend yield. So by any measure, it's starting to look a little bit expensive where it is at the moment, and would be due for at least a consolidation. So whether you want to think about taking profit and reallocating that capital elsewhere, but around $19, $19.50, Goodman looks fairly full value. GPT switched from sell conditions into buy conditions. It's been in buy conditions for a range of valuations from around $4.40 all the way down to $4. Now pushing back up to $4.67. Maybe a little bit of upside there, but again, SLF preference over GPT. Aurora, I was looking for this to pull back a little bit deeper, sub $3. That hasn't happened. Could be partly explained by the share buyback that the company's conducting. The earnings growth is improving, but it's still not. It's not double-digit earnings growth over the next 12 months. So I'd be surprised if the stock really can rally too much higher. But it is a buy on the dip, and it's broken out of its downtrend. Domino Pizzas, we like this and continue to buy it on a dip at the moment, maybe looking a little bit expensive, and look for the next pullback. So what you're watching for are these algorithm buy signals, which is the green marker down the bottom coming in on these higher low formations. So if we look back at the history of the performance here, in recent times with the buy signals, we had a buy signal here at around 73, again here at around 82, now pushing 107. CBA, out of the major four banks, CBA is the one that's in the model portfolio. Switched from sell conditions into buy conditions there at 81, now pushing up towards $89. Westpac's quarterly update and half-yearly result was beat analyst expectations, but I think the underlying business is still down 10% on the same time last year, but the add back of provisioned loans during the COVID period is padding the profit result. But in general, operating conditions at the moment for the banks seem reasonably robust, although there's obviously cost pressures on the business, and you're seeing Westpac highlight that over the next 3 years they're stripping out $8 billion of costs from the company as they obviously continue with their measures of closing branches and moving more and more to a digital banking model to compete with new fintech startups. So that transition in banks' cost base is likely to accelerate across the board for all the banks over the coming 2 to 4 years. In the case of CBA, we continue to like it. So on any weakness, another pullback to buy conditions we added in. The other major banks are under sell conditions, so we look for a correction lower and then a shift to buy signals in the other major banks, maybe in the back half of this year. Linus is under algorithm buy, so it switched from sell conditions here into buy conditions in September there at around $2.30, now pushing $5.50. In the case of Stockland, switched from sell conditions into buy conditions here at around $4, now pushing $4.70. Aristocrat under buy conditions continues to perform well, maybe getting a little expensive up here where it is at the moment. If we just backtrack over the last two recent signals, a buy signal in October 2020 and then another signal there in January. January that was around $28, now pushing $37, so up materially since then. Centre Group's a fairly new addition into the model portfolio, switched from sell conditions into buy signal here at around this $250, now pushing up towards $270. The index itself, really you need to think back to what's happening in the Nasdaq. I think our market, as long as the US continues to bump along sideways up, at these elevated levels, our market's going to continue to do the same. So the leading indicator really remains the Nasdaq, and we just get a little bit cautious when we see it up near a double top and trading below the moving average. But the strategy is not to exit equities, it's simply just to take profit on a few names in the portfolio, and reduce the number of holdings, especially where you've got duplicated holdings in the same sector, or you're holding multiple exposures to a particular sector. If there's an opportunity there to trim that down a little and hold a more concentrated exposure to the better performing stock within the sector, then I think now's a prudent time to do that. From a recovery standpoint, A2 Milk, I put a post on the blog today about 3 names to have on your watch list, if you like, as potential recovery plays. And what we're looking here is an inflection point in the downgrade of earnings, and hopefully by identifying that inflection point, subsequently we then look for the higher high, the higher low, and the beginning of a new multi-year uptrend. Now, that type of turning point or inflection point is obviously not easy to forecast in the market, but 3 names to start watching more closely would be A2 Milk, CIMIC, and IAG, and I'll continue to update you on the blog there regarding those. Amcor provides a third quarter earnings release on Wednesday this week. Don't expect it to surprise too much to the upside, but I'd expect the downside risks are fairly low in Amcor. The company should deliver high single-digit earnings growth. The Aussie dollar's unlikely to move too much higher, I think, from where we're sitting at the moment, around 77, 78. So I don't see too many headwinds there for Amcor. So owning it and maybe selling covered calls is something to think about there. Beach disappointed with lower production and downgrading the size of reserves at one of their fields, which came as a bit of a surprise to the market. So we've seen that correct from 170 back down to 130. Just keep an eye on the momentum indicators here. Let this little bit of selling wash out. The story for Beach is still reasonably attractive over the next few years, so I'd be surprised if we don't see buying interest rebuild there in Beach. Cube, we quite like this simply on the basis that port volumes continue, so container volumes coming into ports here in Australia, in particular, obviously the ones owned by Cube, continue to be strong, up around 10 to 20% on the same time last year. So net Cube should be a beneficiary of that. Supported around 290, stock continues to hold above that. JB Hi-Fi, the only caution here would obviously be with reduced assistance, government assistance going out over the next 6 to 12 months. Does it have an impact on discretionary spending? The offset to that is obviously unemployment is back down at 6% at the moment. The range that I've created there on JB Hi-Fi is fairly wide, so I've said somewhere between sort of $38 and $45, but just highlight that it has shifted to algorithm buy signals, so a shift of these momentum indicators starting to point higher, and a more conservative approach would be to wait until the price action crosses above that 10-day average. But JB Hi-Fi, I think probably more of a sideways consolidation rather than a recapture of those recent highs. Qantas, under buy signal, but not really something we're too aggressive on at the moment. Northern Star, preferred gold exposure. So gold's been a little bit soft. It's pulled back from close to 1800 back down to around 1740, now trading back at around 1770. Northern Star is still attractive given the cost synergies with Saracen. Watch this closely. If we see the price action back above that average, that might be a trigger to start having to think about long exposure. And we're doing more on call options at the moment as a way of getting exposure to bullish moves in the market without taking on the full risk of owning the equity position. So if you'd like to talk to me further about some slightly more advanced option strategies, please give me a call on the office number, and I'm happy to run through some of the strategies we're running in the market at present. Coles Group, we quite like this, although we recognise that both in the case of Woolworths and Coles, we're seeing earnings growth slow from above average levels over the last 6 months. the market sort of digesting that and realigning the share prices. Woolworths probably settles somewhere around that 38.50 maybe. Coles support seems to be in place at around this $15 level. Both of them are probably not likely to offer a lot of upside over the coming months. Woolworths just need to keep an eye on that, as it may get a bit oversold and that may create a short-term trading opportunity. But owning Coles, selling covered calls, it seems like a low-risk proposition at the moment after the correction the stock price has had. Mirvac not doing there again. Just a reminder, look at SLF. Lendlease, flagged this on the blog today for the first time for quite a while. It's a really messy environment for Lendlease's earnings and operating divisions, given the COVID period over the last 12 months, and we haven't seen too much positivity from the company or update to earnings guidance. So we continue to watch for that. I don't have a release date in front of me on their next result, but at around this $12 level, you start to sort of wonder if the market's looking out 12 months. Are we into a period where we start to get a bit better visibility for Lendlease and a slight improvement in their earnings picture? So still high risk, but think about Lendlease. That needs to start to come onto your radar a bit more. Link Administration, I'd look for more downside there before adding that in. Cochlear, take profit there. Fortescue, still preferred Fortescue and Rio as the iron ore plays. Fortescue, Rio, Woodside Petroleum, owning those high quality names still makes sense at this point in time. Wesfarmers, watch this closely. The correction that we've had from 55, if we were to see this back down somewhere around 52 to $50, could be another buying opportunity. Just watch the price action. It's below the moving average at the moment, and I'll draw your attention to when we do get that price activity crossing back above the average. Sydney Airport's not doing too much there at the moment. Atlas not doing there. BlueScope, terrific earnings growth here in BlueScope, should continue, so we'll revisit this. Obviously the last algorithm buy signal was back there in January at $15, now trading $21.50, so look for a little bit of a pullback, and we'll revisit that on the next algorithm buy signal. Here we are, Woolworths. I mentioned this earlier that we may get a situation where this gets a little oversold. So I created a fairly wide band here. It looks like it could even sort of trade down to this sub $39 tomorrow or early this Tuesday, Wednesday. If we were to really see it back down around this $37.50, I think you're going to get a material bounce from that level. The stock's offering just under a 3% dividend yield, so a buying opportunity sub $38 there would be attractive. So we'll continue to watch that, and I'll keep drawing your attention to the entry opportunity there in Woolworths. Seek a little expensive, so we're not doing too much there, but it has performed well under the buy conditions. Soul Patterson had another algorithm buy signal here today after the initial signal there in February, and continues to perform well. But again, not a stock that we're too active in. REA, I think a little expensive, but obviously terrific business, but at 60 times earnings, REA looks expensive. Rio, for the moment, be a buyer of that on the dip, just mindful that it's below the average, and we'll revisit that if we see a little bit more of a material correction. Treasury Wines has been added into the model portfolio, and it's under buy signal, so I'll continue to update you on the financial results there as they come through. Computer Share under buy signals, but not too much in the way of surprise on the upside there for earnings growth. Evolution, preference still Northern Star within the gold space. Xero we like, it's performed well under buy conditions, but a little expensive up there at around 140, so for trading portfolios we've taken profit on that. ALS under buy signals, but not doing too much there. In the case of Woodside Petroleum, it's really been it's had another leg lower, where we were thinking that maybe off this 22, the rally that was underway pushing up to 23, could see it retest that 25 level. That hasn't happened in the last couple of days. It's ran into resistance at the end of last week, and then a soft close today. Whether we get down and retest sort of this period or this level down here to sort of 21.50, but all in all, I think the outlook for oil still remains fairly robust, and the picture should continue to improve there for Woodside. So continue to look for an inflection point there. Oil search now under buy conditions. Downer EDI in the infrastructure space, double-digit earnings growth attractive. So both CIMIC and Downer have a think about those exposure to infrastructure theme. Alumina not really that fond there. WiseTech not doing their Challenger under buy signals, but not doing their Cleanaway. We've taken profit on this again within the trading portfolios, up at around 270, 280. We obviously really like the long-term thematic that's driving earnings growth here for Cleanaway as they shift more into sort of a vertically integrated, doing more around recycling. But it is starting to get a little bit expensive up here at the moment for what's probably likely only to be at the most 5% earnings growth, 3 to 5% earnings growth. So we're a buyer of Cleanaway on a pullback, and again I'll draw your attention to that in the coming weeks and months on the blog. Afterpay under buy signals, but not doing their app and under buy, but continue to sort of monitor that as to whether we get an inflection point and it gets added to our list of counter trend trades, but not there at the moment in the case of Appen. Altium again on the watch list, maybe back down to around 27.50. We'll take another look at that. IDP Education's under buy signals. ResMed now, add this one to your list. So at the moment you should have Woolworths on there as a potential for trading new oversold conditions. Certainly ResMed and some of the others I'll revisit at the end of the recording there. So ResMed we like. So what's happened there to cause the sell-off in ResMed is the company failed to deliver top-line revenue growth, which disappointed the market. But the range that we look for is to see if we get a retest in a soft market back down at around that $23 level there as our buying opportunity. Westpac, as I mentioned earlier, delivered a good earnings result, still down on the same time last year, but with the add backs of pre-provision loans. Telstra, we continue to like this with the separation story unlocking value for shareholders, so I think the downside risks there are low. NAB, all the Aussie banks were reasonably well supported today following the good result from Westpac, in particular the add back and the reprovisioning of bad loans has been a boost for the sector, and confidence around dividends being reinstated. The banking sector still requires some caution if we see a risk-off phase develop in the US equity market. So for that reason, we continue to watch the Nasdaq. The regional banks, a bit cautious on those. Reece not doing there. We'll take a look at Reece later in the year when it shifts to buy signals. Ampol now under sell signals. QBE under sell. ANZ under sell, looking for a more material sell-off in the banks, at least across the other three majors. CBA's under buy signals at the moment. Tabcorp, wait for a more material sell-off and a shift to buy signals. Suncorp's now under sell signals. Vicinity, again, SLF ETF, likewise with Dexus, pick SLF ETF over Dexus. Oz Minerals, copper prices remain extremely strong, but we're waiting for a more material correction lower there. Origin Energy disappointed the market again with bad numbers out of the retail energy sector. The bright spot was the LNG sales in Queensland continue to remain robust, and really underpins the story there for Origin whilst they stabilise the cost base and pricing within that retail electricity side. CSL under sell signals, they're at around 270, so reason to be a little bit cautious there on CSL. NextDC now under sell signals, so that's a stock that I think you need to have a think about on the short side, especially if volatility picks up in the Nasdaq and we see weakness emerging there. Brambles under sell signals, but as I've mentioned in previous recordings, Brambles has reaffirmed earnings growth of around 5%, so I'm not sure the downside risks are substantial there. Macquarie earnings back at the same level they were pre-pandemic, so it's fair that the stock price is back up at these levels at the moment. In the case of Macquarie, any shallow correction that we get, we'll see that switch back to buy signals and it'll be added back into the model portfolios. AusNet under resistance, APA under resistance at around that $10 or under sell signals, but the fundamental story there for APA still looks reasonably sound, so I don't think the risks are substantial to the downside. Mineral Resources, look for a more significant sell-off in the back half of this year and that to return to jumping back to Mineral Resources. So looking for this to have a more material correction lower and a shift into algorithm buy conditions. AGL, clear lower low, lower high, bearish pattern there in AGL. Ramsay, we like this business just from a defensive income standpoint, but highlight that it's under sell conditions at around this $67, $70 level, and I've got that resistance overhead there. Expect it to more bump sideways and really break out to the upside. Incitec Pivots had a good rally. Under sell signals though. Sonic Healthcare now under sell signals with a resistance at around that $36. Ansell resistance up there at around 42. Spark under resistance. Boral, look for a more meaningful correction lower. Horizon continues its pattern of lower lows, lower highs. Insurance Australia Group, now I've just shuffled this support line up here at $4.60. A break below the 10-day average or a break below that $4.60 level, you probably want to think about running stops on that trade. What we're trying to do here is look at whether we're at the beginning of a inflection point and support being developed after a long correction from $9 down to $4.50. ASX under sell conditions here at around $72, 3% fully franked dividend yield, fairly flat earnings at the moment, so we just continue to monitor that at the moment, but you could even think about selling call options over it. The downside risks are relatively low, but if you want to have a chat with me about ASX and the exposure there, please feel free to give me a call in the office. Medibank Private up against resistance there. NIB Holding delivered a surprise positive result, which could be a sign of things to come for Medibank. Orica under sell conditions, moving lower, lower lows, lower highs. Crown under sell. Newcrest, so what we've seen sell signals in GDX, in miners, in Gold Road Resources, in Newcrest. So it really does leave us focusing on Northern Star as the preferred gold play at the moment, which fits with our fundamental analysis of it having that added support from the cost synergies. Transurban, downside risks are relatively low, but just highlight that's now at sell signals up there around $14. South 32 under sell, Nine Entertainment under sell, Reliance under sell, Magellan's under sell signals. BHP's now it's been under sell signals for a while, but moving lower from that resistance. IGO under sell, car sales under sell with $20 resistance. Fisher Paykel's been one of the better performing stocks in the portfolio. It's been under buy signals from $15 or $14, so just highlighting that the shift from these sell signals here into the first buy signal, and then subsequent signals have all been buy conditions until just recently. We've now got a sell up here at around 34, and the only conclusion you can or reason for being a little bit concerned here is a valuation. Fisher Paykel's trading up near 50 times earnings at the moment, delivering very good earnings growth, especially in the last result, up around 30%, but whether that's repeatable at that level of growth to justify that 50 times earnings. So I don't taking some profit up here in Fisher Paykel makes sense to me just from a risk management standpoint. AMP under sell conditions are moving lower. Santos under sell. James Hardie under sell. Worley's under sell conditions, and then we are back to TPG. So just to recap on what's on my list at the moment, and you may wish to make a note of these. So the IZZ, obviously there's some issues at the moment with pushback against Chinese companies, in particular Chinese large tech companies, and we've seen those trading at lows that we hadn't seen for the last couple of years, and whether that's Alibaba, Tencent, JD.com, there's a handful of the big tech companies that are under pressure. The IZZ is a bit more of a broader index exposure, but if we look back over the last 3 years, around this sort of $55 to $60 has been the support level, and the IZZ's mostly traded sideways since sort of 2018 or late 2017. But there is a clear pattern there that at either $55 support or up near $60 is support. So you could certainly have a think about maybe taking a half position exposure here and then adding to it down here, or adding it here and running a stop loss and then rebuilding the position at lower levels. But for the most part, I think back down here at around $59, $60 IZZ starts to look interesting. Kogan disappointed the market based on a warning around excess inventory. And we're just seeing after the correction a little bit of buying come here in at around this $10 level. So just within that e-commerce space, it's one to have a think about. What I think is a lower risk proposition is still this Cure ETF, which is exposure to US biotech. So we've been fairly aggressive buyers of this and continue to build the position in that, looking for that to trade higher. So that's broad exposure to US biotech. SLF, we really covered this earlier in the recording, but exposure to just Australian real estate investment trusts within the top 200. Coles and Woolworths, I think I've covered Coles enough, but let's just revisit Woolworths and remind what we're going to be watching there. So we've seen the correction lower from 42 down to 39. If we were to get a little bit of softness in the US market and continuation of risk adverse positioning in portfolios, and Woolworths came down and tested sort of what I flagged there as the value range, we'd be fairly aggressive there on either an option strategy, buying call options, or simply adding stock into portfolios around that level. So I'll continue to monitor that. As I mentioned with IZZ and the tech stocks in Asia being a little bit oversold, this Asia Technology Tiger ETF, we've seen it correct from $14 back down to $11. In an ideal scenario, our entry level would be closer to 11 rather than the current 1170. So you can see that band that I've created there, but certainly that now is on the watch list. And just to recap, ResMed, so again, if we're to see this a little bit lower back in a soft market, back down to around that $22 level, I'll certainly draw your attention to that on the blog. Otherwise, we've got a couple of minutes before I finish tonight, so if we just go in here and a reminder, click on watch lists, go down, select the either the recent blog posts, which what this does is store the last 30 days of companies that have been commented on the blog, and you can have a think about your positioning in these names. We've also got the recent signals, so if you want to have a look at the stocks that have switched to buy conditions in the last 7 days, you can go through these, and as a reminder, click on the symbol, and as you do that, then you would click on these arrows to toggle through to the next stock within that list. Recent blog posts, recent ASX signals, this is the international, and your custom list here is where you're able to add stocks to your watch lists, and again reminding you that you can toggle through those through the charts. So thank you for listening in this evening. If you'd like to discuss any of the stocks that I've covered tonight, please give me a call in the office. And just as a reminder, we'll keep an eye on that Nasdaq. We note that it's closed below the average in Friday night session, and we'll see how that sets up over the next couple of days, and that'll shape some of the commentary provided on the blog. Again, thank you for listening in.